Have you been waiting for the opportunity to get rich in 2025? Right? Don't miss it from this year. If you still keep the habit of going to work to receive salary, save spending and put money in a bank account without daring to use it, it's like you are helping a stranger pay off debt. Not only that you help them pay off debt, but this stranger uses the money you worked hard to earn to spend everywhere. The end result is that the stranger is getting richer and you are getting poorer. Why is that? Because this world will once again turn upside down and punish those who only know how to save. What does this mean? Dear Fortune, hello. Ladies and gentlemen, in the past 4 years, have you received the money that the US issued or not? You will realize that if you can't buy US stocks that have increased in price strongly, it doesn't matter, because US housing prices have increased. Even if you don't invest anything, just leave money in the bank. In the US every year, you can still receive 4 to 5% interest, even if you don't work anything but converting money to dollars. For example, you are Japanese and have converted all your yen to dollars. What is the result? Your assets have increased passively in value by 50%. So if you convert all your money to dollars, then buy a house in the US, then use that house as collateral to get the mortgage money to buy US stocks. Then use the stocks as collateral and deposit the money into a term savings account. Then you will receive the maximum amount of money that the US has issued in recent years. But this method will completely change from this year. In the past 4 years, the Biden administration has played the high interest rate card to attract dollar flows from all over the world to the US, increasing the value of assets in the US. But in the next 4 years, the Trump administration is expected to reverse this strategy. He wants to lower interest rates and devalue the dollar while boosting spending to expand the scale and shopping like crazy. Recently, he even announced that he wanted to buy Greenland. So where will the money come from? In the previous video, we saw that the current flow global money is pouring into the US. But most of it is used to buy US stocks, not US government bonds, which means that stock owners, the capitalists, will receive profits, while the US government, the bond issuer, will not. For example, Warren Buffett can sell stocks and keep the largest amount of cash in history, while the US government currently has only about $7 trillion left in the treasury. However, each month, the amount of money the government spends exceeds its income by $200 billion. With this deficit, the money in the treasury will run out around April or January this year. However, the US government will never lack money to spend, because they always use a single method. The Federal Reserve will open the printing press to print more dollars and buy US government bonds. This happened in 2009 with $2 trillion. And in 2020, when Trump became president, with $5 trillion, each time he prints money, the amount of money in circulation will be greater than the money will be lost. Price causes inflation. For example, if I borrowed $10 million from the bank, when money loses value, I still paid $10 million. But the real value is only $8 million. While if you save $10 million, the real value of this money will also decrease to $8 million. The $2 million lost is a transfer from you to me. Isn't this? You lending me money and helping me pay off my debt. Currently, the US owes more than $30 billion. How will they pay off their debt? This is the way if you lend the US government $10 million for 10 years. After 10 years, they will pay you back both principal and interest. But the real value of that money is only $8 million. This means that $10 million could previously buy a villa, but now it can only buy a normal apartment. So from this year, if you earn money and just leave it there without doing anything, the money you earned will belong to someone else because it will be transferred invisibly. If you want to protect the money you have worked hard to earn for many years, do not want to become a pawn or victim of this game. Even want to take advantage of the opportunity to make your money more and overcome social barriers, then you can follow my channel. In the future, I will share more useful information with you. If you are afraid that after listening you will forget, it is equivalent to wasting time. You can like this video so that the video will be automatically saved to your playlist to make it easy for you to come back and follow. First of all, everyone needs to prepare mentally that money printing will become closer and closer to us. Before it could take decades to happen once, but now this cycle has shortened from once every 5 years, then once every 3 years, and now only once every 2 years. That means from this year, We need to prepare early to face the period of high inflation. What does this mean? We invest in bonds, US bonds. How to make money? When I was in college, my teacher taught me that when the economy is good, we should buy stocks, because companies will make a lot of profit, leading to an increase in stock prices. When the economy is in recession, companies are making losses. We should switch to buying safer assets, such as US bonds, because this is the safest asset in the world. This is like you lending money to the US to invest. As long as the US does not go bankrupt, you will definitely get your money back. So in the past, people bought US bonds when the economy was in trouble and most other assets fell in price because US bonds could still bring stable interest rates. US bonds are considered an insurance asset, like home insurance. When you buy insurance, the purpose is not to make money, but to protect the value of the asset in case your house burns down. To help you not lose all the money you invested in the house. Hedging assets like bonds are to protect capital. But if you look at the price of 10-year US bonds, we'll see for the past 20 years, the price of this bond has been increasing continuously. What does this mean? It seems my college professor will have to review his lecture. Because, whether the economy is good or bad, US bonds are still in demand. For example, in 2020, when the market was most chaotic, the US bond interest rate was just under 1%. But its price reached a record high of $140. Which means if you use $100 to buy a US bond with 1% interest rate per year, you will receive $1 in interest. However, because there are so many people competing to buy US bonds, its price on the market has increased to $140. If you want to buy this bond back from me, you will have to pay $140. But when the bond matures, you will still only receive $1 in interest. Which means when you spend $140 to buy this bond, your real yield will be less than 1%. To double your investment, you need to wait more than 100 years. This is a lower return than any form of financial investment or insurance. However, in the past 20 years, countless people have rushed to lend their money to the United States through US bonds. Why is that? It's simple. Because US bonds can increase in value when I buy them for $100 but sell them to you for $140. I have earned 40% profit on the difference. This means that in the past 20 years, people who buy US bonds are not just hedging or earning a little interest, but are speculating, like playing stocks, to profit from the increase in bond prices since the internet bubble in 2000. The US Federal Reserve has reduced interest rates 11 times in a row. From 6.5% to 1%. The interest rate of US bonds has also decreased, causing bond prices to increase. Because previously the bonds I bought for $100 had an interest rate of 6.5%. But now newly issued bonds only have an interest rate of 1%. If you want to buy back the 6.5% bond from me, you have to pay $120. Therefore, the price of bonds on the market increased from $100 to $120. Which means that the lower the interest rate, the higher the bond price. Since 2000, the US has used a low interest rate policy to stimulate the economy, and thanks to that, bond prices have continuously increased. People have rushed to buy bonds because when they sell again, the price will increase, especially after the 2008 financial crisis. Bond prices increased the most because the US not only reduced interest rates but also launched the first money printing program. Similar to the COVID-19 pandemic in 2020. Print money again and the bond interest rate is only 1%. But there are still many people competing to buy. The reason is because people believe that in the future, the US will definitely have a crisis. And every time there is a crisis, the way the US handles the economy is only two. The first is to reduce interest rates. The second is to expand the balance sheet, print money and use that money to buy US bonds. Which means lending to the US government. No matter which method you choose, the price of US bonds will increase and bondholders can be sold to make a profit. People who invest in bonds often use financial leverage. For example, if I buy $10 million in US bonds, I can use it as collateral at the bank to borrow $8 million. Then I continue to use this $8 million to buy more bonds, repeating the process. So, even though the bond price only increases by 5 cents thanks to leverage, The actual profit can be up to 50 cents. Previously, when buying bonds, we were afraid that an economic crisis would not happen. Because if there was no crisis, the US would not reduce interest rates or print money and the bond price would not increase. This is like buying home fire insurance. People who buy insurance are not necessarily afraid of the house burning down. But, on the contrary, they hope that the house will burn down soon so that the insurance company can compensate a large amount. Then they can use the compensation to buy a bigger house. Similar to US bonds. Like home insurance. In the past, buying bonds was to prevent risks. But now people buy them to make money, and this profit comes from the money that the US government prints. So what is the truth of what is this world? Why does the US government have to print money, and why does economics say that inflation is a good thing? People say that rising prices are a sign of economic growth. But think about it. If prices don't rise, what will happen? That means people only need to earn $1 million to retire. Only need $500,000 to buy a house. $100 to buy a car. The rest can be used gradually. Look at Japan. Their prices barely increase and life is still stable. Except for decay, most of the real estate prices in other areas of Japan have decreased over time. So the Japanese have gradually accepted the lifestyle of lying. Still not competing, not striving, and feel satisfied with life. But the problem is, if more and more people choose to lie still, who will work? Who will try to make the country better? The Japanese economy has therefore stagnated for the past 30 years. From the perspective of the people who manage the country, they are forced to devalue the currency and push up prices. This encourages people to withdraw money from the bank to spend and invest. Because one person's spending will become another person's income. If everyone keeps money in the bank, society will lack money in circulation. Then business people will have no one to sell to. And where will the money to pay employees come from? If people refuse to spend money, the government will print money to replace it. They will lower interest rates. At the same time, it triggers inflation, making all food and accommodation costs more expensive. This forces you to spend money now because, if not later, that money will no longer have enough value to spend. Inflation basically encourages people to consume and invest. From there, the economy begins to circulate and salaries can increase accordingly. However, is it true in theory? When prices increase, will your salary actually increase? And even if it does increase, will that increase keep up with the rate of inflation? How many people can still afford to buy a house when unlimited money printing is allowed? In theory, this is pumping. Add money to the market. But how much of that money actually reaches you? Most of this money is lent at low interest rates to large capitalists, who use that money to push up stock prices to attract small investors to participate. Then they dump stocks or short sell, withdraw money to safety, and continue to wait for the opportunity to buy at a lower price. That's why the stock market is where money flows from printing money in the US. If money doesn't flow into stocks, inflation will push consumer prices up to uncontrollable levels. At the same time, stocks are also a tool for the rich to transfer assets that workers have worked hard to earn into their pockets in the fastest way. This is the nature of finance. Why can the US be rich thanks to finance? Because this world doesn't need to create new wealth, just need to transfer and appropriate existing assets from others. But what's the next problem? The Japanese government is not only the first country in the world to promote printing money, but they also lowered interest rates to -0.1 ph. Meaning if you deposit 1 million yen in a Japanese bank after 1 year, you only have 999 yen left. You not only do not receive interest, but also have to pay 1,000 yen management fee. Isn't this very contradictory? Isn't it true that reducing interest rates and printing money will lead to inflation? Oh, so why does Japan have inflation? This is the reason why assets in the US can continuously increase in price in the long term. Because the US is cheating and Japan is their cheating software. What do I mean? Currently, inflation in the US is very serious and their debt is also huge. If the US prints too much money, the US dollar and US government bonds will become worthless. But if they don't print money, then no one will buy US stocks and bonds. The solution is very simple. Use software cheating. By letting Japan reduce interest rates and print more money, The amount of new money printed in Japan will be borrowed by U.S. capitalists at extremely low interest rates to invest in U.S. assets. This means that the money printed by Japan will eventually not circulate in the market. Japan's domestic currency flows to the U.S. In other words, Japan is helping the U.S. print money. You understand this cheating software. But for that reason, even though Japan prints money and reduces interest rates, the amount of money in the country does not increase. On the contrary, many Japanese people still exchange yen to US dollars to invest in US assets. When many people sell yen to buy dollars, the yen will lose value and Japanese assets will also lose value in the eyes of Americans. But because the money does not stay in Japan, they do not encounter inflation. A clear rule appears every time the US has a financial crisis. Japanese assets increase in value because the money flowing into the US will return to Japan, causing American capitalists to bring money to buy cheap Japanese assets. At this time, the yen increases in value and Japanese assets also increase. When the price of assets in the US hits bottom, American capitalists will sell Japanese assets and return to invest in the US. In recent years, Buffett and many large investors have played this way. Why is it? Because the Japanese government committed that, regardless of stocks or bonds, they will guarantee liquidity, meaning that even if you push up the price of stocks or how high the bond goes when you need to sell, you don't have to worry about no one buying. You can always sell it back to the Central Bank of Japan. That means investing is almost risk-free. But the problem arose in 2020 when the US started printing money and US government bonds called US bonds reached a new peak. Its value has started to decrease sharply. In 5 years, US bonds have gone through a bear market, meaning its value is decreasing continuously. US interest rates increased from 1% to 5%. As fewer and fewer people are buying. Why? Because if today you buy at $140, tomorrow it can drop to $94. If you sell, you will lose money. And if you don't sell, you have to wait 10 years to get this money back. Who would dare to buy in such a situation? More importantly, the people who previously held most of the US bonds were Americans. They printed money and borrowed money themselves to use. Previously, 65 US bonds were bought by Americans themselves, meaning only 35 US bonds were bought by other countries. But now this ratio has dropped to 21. Even Japan, which used to be the country that bought the most US bonds, has stopped buying. China and the UK also no longer buy US bonds. Although the US Federal Reserve has reduced interest rates, but the interest rate of US bonds has not decreased but has increased. Now US bonds are providing an interest rate of 5%. A very high yield. Before, other countries and investors often competed to buy US bonds. But now, even with high interest rates, US bonds are still difficult to sell. Not only cannot be sold, but many countries are continuously dumping US bonds. The end result is that the Fed and US capitalists are forced to buy back 9 of these US bonds. Therefore, many people conclude that the Fed will have to expand its balance sheet. The financial system prints more money and buys a large amount of US bonds. This will cause the value of US bonds to increase again. Is this true or not? The Fed will expand its balance sheet and print more money. This is in line with my prediction. Because the US government has no more money to spend. But is the US bond really? Whether or not there will be a strong recovery is another story. As I said, the whole world is currently dumping US bonds. If the Fed tries to lower the US bond interest rate to just 2 to 3% and sells it at a higher price than before, what will happen as a result? US bonds will be harder to sell and even more sold off by other countries. Then the Fed will be forced to use more money to buy back US bonds. This is the reason I think that from 2025 onwards, a hyperinflationary era will begin. The Fed's money printing speed will become faster and faster. Previously, it could take a decade to print once. Then it will shorten to 5 years. Then 3 years, and now it can only be 2 years or even 6 months at a time. US bonds will become harder and harder to sell. Only if the Fed continues to buy US bonds will there be a short-term recovery. Because the Fed will temporarily pump a large amount of money to buy. But if it is said that US bonds have escaped the bear market and returned to the bull market, I think this is very difficult to convince me. The only way to change this situation is if Donald Trump is re-elected and, as he has declared, to launch a global trade war, making the world economy more chaotic. When the global economy weakens and investments around the world are losing money, people may go back to buying US bonds. This I believe Trump will do. But are you sure you will succeed? Right now, what we can be sure of is the speed of printing money in the US will increase and the US dollar will be in a slump during the K devaluation. What are the consequences before the pandemic in 2020? I can use $10 to eat a KFC meal. After F prints unlimited money with a KFC meal, I have to pay $20. This fork is, F has directly taken money from their pockets, using their hard-earned savings to help the US pay off its debt. So for me, the best hedge has never been US bonds. Or you may not believe me, but try looking at other countries recently. What are they investing in? The answer is only one: gold. Because gold is something that the US Federal Reserve couldn't print. 20 years ago, to mine an ounce of gold, you had to remove a ton of rock. And now you have to remove 7 tons of rock, which means the cost of mining gold has increased B times. But we have always been indoctrinated with wrong ideas. For example, Warren Buffett always taught that gold has no investment value. The reason you can see in my previous videos. US textbooks also teach that gold only has value during wartime or even the apocalypse. At that time, I didn't understand if there was really a war. Even though gold increased in value, what would be the use of holding gold to exchange for wages? Wouldn't you die faster? So what is the truth? During war, what really increased in value was food and gold. Since 2000, when the US started lowering interest rates, the price of gold has increased tenfold, while the US S&P 500 stock index increased 30 times. If you still believe that gold is just a bear market asset, then why, during the bear market, gold price is higher than US stocks? If you believe that the US dollar will increase in value in the future, then don't buy gold, because then you will need less dollars to buy more gold. But, on the contrary, if you are like me and believe that the future will enter an era of great inflation, the US dollar will continuously lose value, then gold is the best hedge asset, because in the future you will definitely need more dollars to buy less gold. For me, if I earn $1 million, I will use a portion of that money to exchange for physical gold as a long-term hedge asset. Sometimes when gold enters an uptrend, like early last year, I will also take a portion to invest in gold ETF. Or use leverage to invest in futures to make short-term profits following the trend when there is no other opportunity. We see, gold is one of the rare assets that shows the bullish breakout pattern that we have learned now. The risk we have to bear when buying gold only about 2%. But once the price of gold increases, it can break the peak without limit. This is the profit to risk ratio. Some people live to sleep better. Some people live to wake up. Now the situation seems calm. But before the storm it is always like that. In fact, the US stock market has started to enter the second correction phase. Tonight will be the time when the moon reappears and the situation is forecast to become more chaotic. But for us, such chaotic times are the time to earn more money. Because when an asset drops sharply, cash flow will move to another asset. Risk always comes with opportunity, and all the crises that we investors and businessmen see I will share with you. In turn, you predict what will happen next. Due to limited time, I will end here. We share free information on how to become a businessman, investor and achieve financial freedom. If you don't want to miss it, follow my channel and turn on notifications. Don't hesitate to share. Share this video to everyone. I sincerely wish you guys who liked this video to soon achieve financial freedom. Just in what I said today, you find 1 or 2 useful sentences to improve your life. I am satisfied.